And now, without further delay, let's begin today's event, sponsored by Onfido and hosted by American Baker. I'd like to introduce your moderator for today, and that is Pat Spear. Pat, you have the floor.
Thanks, Adam. Thanks to all of you for joining us. As Adam said, my name is Pat Spear, and I will be your moderator today. We have a lot to cover on a topic that is growing by leaps and bounds in terms of importance by the day. So I want to introduce first and get that taken care of, our esteemed panelists. Okay, let me just take this to the next slide and let's go. All right, Jeff Pascarella is Chief Compliance Officer at Drive Wealth. At CCO, he leads the company's brokerage compliance and risk management functions, including anti-money laundering, surveillance, policies and procedures, correspondent review, and client and regulatory inquiries. Prior to joining Drive Wealth, Jeff served as General Counsel and COO at American Wealth Services and Benchmark Investments. He also served as Managing Director and Head of Financial Crimes for UBS in North and South America for all the US-based UBS entities. Prior to UBS, he was Regional Director and Senior Vice President overseeing FINRA's South Region and oversaw FINRA's National AML investigation team. Jeff also served as the District Director of FINRA's District 10 office in New York. Prior to joining FINRA, Jeff also served as Assistant District Attorney in the Westchester County District Attorney's Office. Next is Jeremy Grant, former Senior Executive Advisor at NIST, currently Managing Director, Technology Business Strategy at Venable, and is also identified with the Better Identity Coalition. Jeremy develops growth strategies, identifies market solutions, and advises on policy impacts across information technology, cybersecurity, and government services areas. Prior to Venable, Jeremy established and led the National Program Office for the National Strategy for Trusted Identities in Cyberspace, the first new cybersecurity program launched by the Obama administration. Housed in the National Institute of Standards and Technology, NIST, as I mentioned earlier, Grant led the administration's activities across private and public sectors to drive a marketplace of more secure, privacy-enhancing identity solutions for online services. We're also going to hear from Kevin Trilly, Chief Product Officer at Onfido, the global identity verification and authentication company. Kevin leads the strategic evolution of Onfido product platform. Kevin has more than 20 years of product and entrepreneurial experience in digital data security and privacy and governance, having led the full process from strategy to execution to scale at companies including VeriSign, which was acquired by Symantec, TrustArc, formerly TrustE, and AssertD. Okay, that's why we have an esteemed set of panelists here, a lot of great bio information. Let's get started. I've got some pretty straightforward questions to ask of you. And to lead off, here we go. What does the current landscape look like for the financial services industry regarding regulation and KYC, also known as Know Your Customer? Jeremy, do you want to take a stab at that to lead us off?
Yeah, sure. I'm happy to. So I think the landscape right now is one where there's, I think folks know what the rules are out there. The question is, how are they going to evolve? And I think, we've certainly seen a ton of interest from Treasury, from some of the different prudential regulators, from the folks at FinCEN, the Financial Crimes Enforcement Network, in focusing in on really, when it comes to things like KYC and, what you're doing to identity-proof people, figure out who they are when you're doing new account openings, how can you improve them? FinCEN flagged last fall, I think it was at a conference in September, they're now seeing more than $1 billion a month in identity-related cybercrime. And so I think the landscape is, partially around how regulations could change, but nothing's been proposed, and I don't know that they're looking so much on leaning on the regulatory stick as much as looking at what can they be doing in partnership with industry to try and improve the way identity is done and, potentially reduce that somewhat jaw-dropping number.
Right, right. What do you think? Kevin, I want to make sure you have an opportunity to add your comments, what your customers are telling you. What does the landscape look like?
Yeah, no, I think when you think about regulation and KYC, there's an aspect of KYC that's just part of doing business, regardless if you're, a financial institution or not. So if you think about that as like an identity component, I think banks and financial services should think about how do you best leverage this investment for compliance and take advantage that you are doing a strong KYC or beginning that identity journey with your end users. And that can pay benefits down the line when you start thinking about authentication or having people call in your call center. So just a point there of building on top of the regulation point. If you're going through this to do work to be compliant, also think about this as a core part of your onboarding of users into your system and figure out ways that you can leverage that. Some of these rules will have some specifics to them that are unique, but in many ways they're trying to build that very tight relationship of knowing obviously who's joining your service up front. And that can pay dividends when you're thinking about fraud and transaction monitoring later when they're using your service.
Right. Jeff, I'll offer you an opportunity. I know you've got a pretty huge laundry list in terms of your background here, but did you want to comment on this first slide?
Yeah, I mean, I think the recent GameStop trading jarred regulators a little bit, right? I think they believe and they understand that they're a little bit behind on the curve on technology. There was a lot of outreach during that trading event to many firms to understand what was going on. And what I think they began to realize is that in the fintech space has really exploded into retail trading. And that's going to have an impact on them on the move forward, right? We saw DTCC propose that apparently will take 2 years to get to single day settlement. But at least they're moving forward. And I think they're going to have to start looking at that in all aspects of financial services, right, including KYC, AML.
Right. Okay, next question. And this is pretty obvious since our attendees are watching us from their home office and we're in pretty much all of our home offices. How has a year in a contactless world changed the way banks are planning to evolve the customer experience with respect to digital identity? So, I think what I'd like to do, I'd like to hear from all three of you on this, but Jeremy, I'm going to ask you to lead us off.
Sure. Well, I'll say if, digital identity wasn't a priority before for banks, it certainly has had to become one the last year. Although, in fairness, most of the banks I work with have been focused on this for quite a while. But the fact that, now almost a year ago to the week, I think we're, I guess a week beyond that, so 53 weeks, we saw basically the virtual elimination of in-person transactions, has really forced everybody to, I think the saying I keep hearing is, we did 5 to 10 years of digital transformation in, 5 to 10 weeks. And so I think it's, certainly become more of a priority than ever before. But I think, per the FinCEN numbers I've seen before, as well as just, where we've seen, I think, lots of fraud, across financial services, also targeting government services where there's benefits to be paid out. It's become really clear that what we have in terms of identity infrastructure isn't quite adequate yet. And so I'd say, banks have done quite well to do the best that they can. But it has also, this last year, I think, really exposed some of the inadequacies of our digital identity infrastructure and showed that we're going to have more to do in the next couple of years ahead. Yeah, no doubt about that. Yeah. What about you, Jeff? Did you, with your background, are you in a position here to say, wow, what are banks actually planning? Are they being proactive? What are they doing now in terms of digital identity because of this?
Yeah, I think, again, the GameStop situation was a really good example of waking the industry up to the advantages and opportunities that fintech has in financial services and brokerage as a service, like DriveOff provides. I think the larger banks are starting to wake up to the fact they need to evolve, and they need to evolve quickly because the fintech firms are out ahead of them on getting market share in the retail space, right? Which then means everybody has to get more sophisticated in how they're onboarding clients and finding out how to tag them with a digital identity. What we saw with some of the activity out there in the fraud space during COVID, right, was there were people stealing unemployment. I think there was a case with a rapper or somebody who purported to be a rapper who was out there boasting that he had stolen $2 million of unemployment. He did that through micro deposits in nominee accounts and through gift cards. And so we really have to figure out a way to how to find and track down that micro AML or fraud within a firm, tracking IP addresses, et cetera, and getting more sophisticated.
Yeah, for sure. Yeah, very interesting. Kevin, what about your customers? I mean, have you seen a big change in the way they're planning to go forward?
Yeah, I mean, customer experience is everything. And as we work with our services around helping verify identities, the expectations of the consumer now have shifted, right? So in the past, there might have been, an office you went to or a branch or whatever. In a pure digital world, we have a digital mindset, which means instant, right-away satisfaction. I can't wait 10 seconds longer. So the digital mindset needs to be baked into some of these processes that just weren't architected in that way in the first place. So just as Jeff and Jeremy were just saying, though, then the second part of that is you still need to have the fraud protection. If you're going fast and quick, you got to still be accurate and make sure you are providing that fraud protection, even just for the well-being trust of the user that's signing up, let alone catching the bad folks. And then I think what falls out of this is just, again, when you're going to pure digital, you need to think about inclusivity from a customer experience perspective. So user accessibility is huge now because there's not that human that can help out in certain cases. And then there's things like, well, we're using a lot of algorithms to make decisions. So what about the bias that might be involved with those? You don't want to be like flipping a bunch of people either side to the wrong queue. These are all really important now because you're driving the majority of people through these processes, and your brand of the bank and the financial institution are sitting right out front of this thing. So these are all critical, and I think we've got to consider this from a design perspective as much as a compliance perspective.
Right, and I'm sure that's what the banks are thinking about, right? I mean, that's obviously top of mind for them. Okay, so this isn't necessarily a loaded question, and it's not necessarily a political question the way I read it as a journalist, but what are we hearing from the Biden administration about its policies around digital identity in the next 6 to 12 months? Could Real ID provide a solution? I would assume, Jeff, that you're very familiar with this. Did you want to lead us off on that?
Sure. So as soon as Biden came into office, he signed a bunch of executive orders. One was kind of putting the brakes on crypto. We had been moving at a faster pace than I thought we would in moving into crypto. And he put the brakes on to allow his administration to catch up and digest the rulemaking that had been going on in various agencies. In that space, Hunter Pierce, the commissioner of the SEC, one of the commissioners of the SEC, on the other day made comments implying or in fact stating that crypto is probably a good thing to move into for the U.S. markets. I think when you look at the offerings in the space, there is a need for a real understanding of how to track a person through the system. There are other countries currently that have a national database, right, as a gold source for the traditional CIP KYC information. The U.S. doesn't have that, right? So maybe Real ID could be that solution. I think there might be some other opportunities too with other systems that are coming online in the next 2 years to do that as well.
Yeah, right. Kevin, I'm going to let you answer next because just wondering the Real ID situation and the fact that it could be the next big thing. I don't know. I'll let you address that.
Well, I think if the administration could see anything, it could see a lot of massive problems, right, between the fraud we've seen in stimulus checks and the unemployment benefits. The San Quentin inmates are millionaires walking around with all the checks they've been able to bilk out of the system. If the problem hasn't been evident, it's super evident right now. So I'd say from that case, the urgency of doing something from a public, accessing public services is really important right now, because back on our last question, more people are doing that remotely versus going into the DMV versus going into the usual offices. So I would say the forcing function's picked up. There's a second part of this, which is also the debate around, are we going to use some form of vaccine passport or something along the lines to prove our health? That's going to impact lots of different things around this country. And so a consideration from the government and how they weigh in on that and either aid that or it's going to be purely private, I think is a big debate, of course. But again, another huge change showing up now in terms of the need of an identity system of some sort. And then finally, I think Real ID just, as a system is strong, right? It's now become, we all use the driver's license in this country as our primary identity. That identity is now being fortified to be able to be used for travel. It's a good benchmark a foundational system to use in some kind of system that the administration might want to put its weight behind. So I think there's a couple things that are bringing to the timeliness and relevance of such a system, and that's a reasonable solution.
Right, right. Jeremy, I want to give you an opportunity to talk as well. I don't know, the policies around digital identity, they seem to be, as Jeff mentioned, ever evolving. So what do you think?
Well, I expect you're going to see a lot from the Biden administration, though. I'll point out, as we're, doing this webinar, it's really just 2 months after he took office. And so I think as somebody who's based in Washington, D.C., one thing I pointed out to people is the team's still getting in place, give them a little bit of time. What you've seen in the near term has been a focus on where there's been, really big problems like what, we had, I think the estimates from the Department of Labor were $36 billion in unemployment insurance fraud last year. And so the American Rescue Plan that passed a couple of weeks ago included some dollars for the states to buy identity verification services for the next round of unemployment insurance checks. But what you're seeing is really just focusing on, there or with other government services. Nobody's taking a broader look at sort of holistically where things aren't working in identity in both government services and the private sector, with financial institutions or health or insurance or sharing economy apps or other places where identity vetting is, quite important. And what I expect to see over time there is something that, we hope aligns with the policy blueprint that we had published in the Better Identity Coalition a couple of years ago. There's legislation, the Improving Digital Identity Act, that was introduced last September, driven by a bipartisan group of Democrats and Republicans in the House of Representatives. That bill is largely based on our coalition's policy blueprint. And the support for it actually came out of a hearing in the House Financial Services Committee that was in late 2019, looking at this topic. And so, the chair and ranking member of that subcommittee and the committee that held it, Bill Foster, congressman from Illinois, Barry Loudermilk from Georgia, joined by John Katko, who's the lead Republican in the House Homeland Security Committee, and Jim Langevin, who's the Democratic co-chair of the Congressional Cyber Caucus. That bill was introduced last September. There wasn't time to take it up in Congress, but got a lot of really good support from the left and right, and it's sort of viewed, I think, as a bipartisan starting point. And so when you talk about taking a step back and taking a sort of a more holistic approach in terms of what does government need to do to address deficiencies in digital identity in a variety of different sectors, we think that bill will be the starting point. We're expecting it to be reintroduced, sometime in the next month or two. What's been holding it up has largely been a Senate counterpart that's in the works, where the senators who are driving that have said they want to take a little time to make some tweaks to the bill, and so everybody's holding off until those pieces come together, and you can hopefully see the same bill introduced in both the House and the Senate. But bringing it back to the Biden administration, one of the things I've pointed out, I get asked about this bill all the time that was introduced last year. Probably 95% of what is in the Foster-Katko bill that was introduced last September could also be done with an executive order. And so, I think there's another possibility that as the administration looks more at this topic, they decide rather than wait for Congress to tell them to do something, they decide to get ahead of it themselves. You mentioned in your introduction, I used to run the national strategy for trusted identities in cyberspace. That emerged out of the Obama administration, but it took a couple years between when they took office and had it crafted, and I expect you'll see something on the Biden administration as well, in part given how many people are back for another term in government. Real quick, you asked about Real ID. So I think Real ID doesn't provide a solution, but it provides the foundation for a solution. In that what Real ID has done that is interesting is it created a pretty robust federal standard for in-person identity proofing to get a driver's license. And that's something that can be leveraged if DMVs do the right things in the states in the digital world. We're starting to see a number of states start to roll out mobile driver's license apps that can complement the plastic cards that we all have in our wallets in a way that can be used digitally. And because it's all based on that trust model of the Real ID identity proofing process, that's something that whether it's mobile driver's license apps or just states perhaps opening up APIs to validate identity attributes, those are two different ways that I think you can leverage the Real ID infrastructure that we spent a lot of money and time building to start supporting better digital identity overall.
Okay, yeah, really good to know, really good information. The next question takes us across the ocean. I'm going to ask, what can the U.S. learn, if anything, from what's going on in Europe, specifically around ANSI and eIDAS? And for this one, I really think Kevin needs to lead us off based on your experience, Kevin. So what do you think? What's going on in Europe?
Yeah, let me take it from a high-level point. So I think in Europe you have a set of rules that are sort of varying among countries, and I think the complexity that brings is pretty difficult for companies that are trying to look at a holistic strategy. And there is a hope that there is some alignment that happens over the next couple of years that brings those into some consistency. But if you take that back and maybe think of the worst case scenario here in the U.S. is you better not have 50 states that all come up with different approaches, because it's going to implode the ability to figure out how to deploy product and technology solutions in a way that's going to make sense. So that's kind of point one. Point two is specifically around ANSI, which is coming out of France. That one, and then I'll just paint a picture also with Germany a little bit. You have very different implementation interpretations that are happening based on what you would assume to be a similar rule of creating a trusted alignment with a user and building that trust that it's actually who they say they are. And this can lead to very different product experiences as you're bringing that customer experience through the onboarding process at the financial institution. And that's tough. And so I think the hope is that we can come down to as few of these as possible and have them be prescriptive only to a certain level, without getting into the nuts and bolts of you got to use this particular approach, to vet the identity, or you must use video all the way through. All these things have lots of repercussions in terms of having something that's timely, consistent for users, because what if they log into multiple banks in multiple states and they all have different user experiences? You can draw a lot of confusion and scare people away. So those are the couple things I'd say that are sort of the concerns to look out for that are starting to happen. They're also starting to think about also data management generally, about this very sensitive data and how it's used, and things like data residency and data sovereignty become very important, which in the U.S. of course is very important. So I think there's a couple of very strong technological aspects to these rules that are making them complex and potentially expensive to comply with.
Yeah. Okay, Jeremy, I want to give you an opportunity to address this based on your background. Is there anything, or that's the wrong way to ask it, but what can the U.S. learn, if anything, from what's going on in Europe?
Well, I think for starters, I'd say the U.S. can learn a lot about the benefits of making digital identity a priority. It was a fascinating, contrast about a year ago between the U.S. and Europe, where, one of the first things that the Trump administration did when the pandemic first started to hit and things shut down was put out an order that basically amounted to a de facto shutdown of citizen services at a lot of agencies. And their quote was, something along the lines of, anything that can't be delivered remotely, we're just not going to offer right now. Meanwhile, in Europe, the folks who have driven the eIDAS program, which for those who aren't familiar with it, it's a way that basically links together 28 now with you, Brexit, it's 27 member states who each have their own different eID systems. So this was a way to make them all interoperable with each other. And the folks who run that office, probably 3 days after the Trump order had come out, put out a blog post that was more or less boasting about how, thanks to the eIDAS infrastructure that we have in place, we can continue to deliver government services. And in fact, we can support social distancing because there's a way that, you can do things without having to leave your house. And I think one of the things from the perspective of the Better Identity Coalition we've tried to talk about is this is really becoming in the U.S. an issue of economic competitiveness, whether it's our peers in Europe or Australia, Canada, Singapore, all across the globe, you're seeing other countries are prioritizing digital identity, and the government has a big role to play. And in the U.S., really hasn't gotten much focus, and so we're starting to fall behind. And I think that is probably the biggest takeaway, here. Beyond that, I think, what's interesting with eIDAS is where they're looking to go. I think later this spring, in the next month or two, they're supposed to release, their plans on what they're going to do for sort of the next version of it. And a lot of where they've been hinting at things, if you look at, what the European Commission has shared so far, is that they're looking to try and expand it just beyond focusing on government to citizen services to also potentially support digital identity for private sector as well. So, for example, if I'm trying to open a bank account, In Europe, I might be able to ask the government who already has issued me a credential in a paper or plastic form to vouch for me digitally. So it's a little early to see what comes out of that, but I would say Europe's been leaning ahead, and they're showing some benefits here as a result.
Yeah, good information, good. So the next question is, how will companies need to adjust identity verification and management strategies as a result of new policy directives? Jeff, do you want to lead us off on that one?
Sure. So I think just it kind of follows up on what was just said, right? The U.S. system right now, both when you look at big banks, right, who have been institutionalized for decades, and the U.S. system itself is antiquated. It kind of equated to our road systems, right, and bridges that are failing, and we need to put money into fixing those. Well, we need to fix our banking system, right? And we saw it with the DTCC issue and NSCC charges on settlement, when a lot of firms right now are able to net settle next day or same day. So the systems have become a little antiquated. We need to find a way to accelerate that in order to achieve best in class. U.S. has fallen behind on some of the AML lists out there right now, and in order to do that, we've got to proactively update our systems. The companies have to. That way, hopefully, there won't be a need for new policies.
Yeah, absolutely, absolutely. Jeremy, what about you? How do you feel companies are going to need to adjust?
Well, I think right now, I think people are sort of waiting to see what new directives emerge. And so I don't know that, you're going to see a ton, other than, Jeff was talking before about what's happening in the cryptocurrency space, where, FinCEN has been, certainly in the last administration, and I think, continuing, now as well, that we have a new one, focusing quite a bit on their concerns around money laundering and terrorist financing when it comes to some of these currencies, and putting a lot of restrictions in place around what you can do with them. And I think in the near term, that's probably going to be where there's going to be quite a bit of focus. Beyond that, in terms of broader policy directives that are going to impact companies, I think honestly, the major point, when people ask me about the Better Identity Coalition, what is it, asking for? Half of our members are in banks and payments and fintech, and they're collectively saying industry can't solve this on its own. Companies like Onfido have great products that are out there that are giving them a lot more tools than they had before. But if we really want to address digital identity challenges, the government's the only authoritative issuer of identity. In the U.S., that's split between the federal, the state, and the local level in terms of where the authoritative issuers are. But the government's going to need to get into the game. And, what a lot of our members are saying right now is we need to see this be more of a priority focus. Digital identity infrastructure is critical infrastructure, and it's time for the government to take a broader role.
Yeah. Kevin, what are your customers telling you? Are they looking now to make some large changes in terms of the new policy directives?
Well, I think all this is usually captured under a risk decision for the company, and I don't think those decisions are changing materially right now. I think overall we have to assume that there will be more scrutiny, and money laundering will have to tighten down more as we have more people using crypto and other things that are more newer vehicles. So I think in terms of what companies are doing, they need to prepare more. They need to think about audits more, kind of get the tech and the policy and the process all kind of in order, and just sort of prepare. And then as we see these things settle out, as the new administration in particular settles in, then you can make an adjustment. But I think right now it's about, think about this topic as just good identity management generally, and do the right thing there. And then sort of keep in mind that as a financial institution, you're normally going to have those extra requirements in the back end of, making sure that your vendors are auditable, your algorithms are auditable, you have, good firm audit trails on your own practices. Those are the kind of things you can do now. And then just, again, as a risk, decide what you think is the probability of something shifting hard. I think some of the things we're talking about, we hope they happen soon, but those things don't happen overnight. So there's probably a couple-year window on some of this stuff in terms of getting it to full deployment. So just kind of maintain best practices around identity management and keep a risk decision around a lot of this.
Right. Yeah, that's a good point. It leads us to the next question, too, because we're looking now, we're kind of guessing, right, what new privacy regulations will need to be considered, and how will they benefit both consumers and the industry. I'm sure there's plenty that would benefit the consumer. I'm not sure, how many are going to benefit the industry, but it's something obviously that all three of you are probably looking at. So Jeremy, let you go first and give us some feedback on this.
Yeah, well, I'll say, depending on how they're structured, it could be a real benefit to both industry and consumers. I think one of the things you've seen the last couple of years is that after years of essentially fighting at the federal level the need for comprehensive federal privacy legislation, you're now seeing industry specifically asking for it. And I think what has changed was CCPA in California, when the California Consumer Privacy Act was passed. And then you started to see a bunch of other states. Virginia just passed one last week. There's about another half dozen states also contemplating passing their own privacy laws. I think industry quickly realized that if you've got 50 states with 50 different sets of rules, that becomes really complicated when it comes to doing business. Certainly on the identity side, there's some things that California did that I think are actually putting consumers at risk. I did a speech at the Identiverse conference last summer where, basic things like if you want to ask a company for your data, well, as long as they authenticate you with a password, no problem. It's, totally missing the fact that there are billions of compromised passwords that are out there. And if you create this as a vehicle for somebody to come into, it's not just going to be consumers that are going to ask for their data. It's going to be criminals who stole their password as well. And so I think we need to have, good privacy regulations that, actually protect consumers and don't, to point to California, I think in the name of trying to do something that they thought was good for consumers might have inadvertently put them at risk because of the way that the legislation was somewhat hastily crafted. I think at the bigger levels, we're talking about digital identity. I think a nationwide privacy bill will help to give everybody a little bit more confidence in some of the systems in that, look, everything that we're doing with identity at the end of the day is about personal data. Who are you? Well, how you figure that out involves collecting and analyzing all sorts of data about you. And a lot of consumers, I think, are for good reason a little uncomfortable with, some of the way that that's done these days. And so, at a high level, we think comprehensive privacy legislation is a good way to, let's get that baseline in place that can give people more confidence in the way that identity data is collected and used.
Yeah, good point, Jeremy. Jeff, what about you? In your crystal ball, what do you think companies are going to need to consider in terms of regulations? What are they going to need to prepare for both consumers and the industry?
So I think the first thing I need to do is read the new Virginia law. So I didn't realize that had come in line yet. But all kidding aside, right? I think there are things that need to be reconciled across the policies and rules, right? So, for example, CCCP and GDRP allow for the customer to ask for deletion of their information, right? But we need to keep it for AML purposes and for regulatory purposes. And so there's customer confusion out there about, are you really deleting my data or you're not deleting my data? And all the different kinds of disclosures you have to put in place to make it clear to them what's really happening. I think that has to be addressed and more thoughtful. And then down the road, as we get into the more big brother, right, real ID with national databases, et cetera, that will have a whole host of other different privacy concerns along the way.
Right. Kevin, you're tracking this as well, right? You want to offer your feedback?
Yeah, I think I'll provide the layer of policy regulation and technology. And I think one thing I'd like to point out is just really with all of us using cloud services and SaaS and data goes into these systems. We use lots of third parties and different processes that the responsibility of the financial services company is the beginning of that and the responsibility of the entire chain. And so having the house in order here of knowing which APIs are sending which data to whom and monitoring, I think is the key word I would say, is probably one of the things that you need to get ahead of. And then the question is, what are you monitoring for? Are you looking for, one state only policy, or, how do you start to build that complex matrix of knowing how these laws map into the reality world of the data pipes in the company? That's tricky, and that's going to be something that's going to need some innovation for sure going forward to make that something that a company can do on their own and stay ahead of it, because there's going to be many more Virginias coming, most likely, and just within the domestic U.S. and Canada and in a few of the natural places some of the companies here in the U.S. expand to, you start layering on that international aspect of it, and as much what data we're sending out of the U.S. versus what's coming in, and trying to prevent those firewalls as much as possible on the borders. So you got border national laws, and you've got, of course, state laws. This becomes really hard when you start to think about what data am I collecting from the consumer, and where does it end up at the end of the day, and how many stops along the way did it take. It's tricky when you think about that from a cloud services perspective, which, of course, many institutions are going through these days.
Right. And what best practices you can apply based on the impact potentially of all of those, right? You look at New York and how California was soon to follow on financial regulations early on. And, you know, the same thing with Europe. It's one of those things like a domino effect in a way. I really appreciate your feedback on that. All right. What is FATF doing to help secure digital transactions in the U.S. against fraud? How should banks and financial services engage with FATF? Jeff, I'm going to ask you to lead us off on that one.
Yeah, so I think banks and other financial services organizations have to become more proactive, use organizations like SIFMA and other industry organizations to advocate for better guidance around this area. And I mean, interestingly enough, FAFSA came out with a guidance document on digital ID. I think it was March 2020, just as COVID hit. So I think there would be they almost were prophetic on coming out with the guidance, right? But we need more guidance from all the regulators. When you look at the idea of a digital ID, when you look at what FINRA and SEC are working on with the consolidated audit trail, which eventually will have one ID for every person who has a brokerage account, those IDs should match, right? And so we need to help push the regulators to talk to each other about their ideas in this space.
Easier said than done, right? What about you, Jeremy? What do you think?
Yeah, you know, I'd echo what Jeff said. I mean, it was just about a year ago that the FATF published its digital identity guidelines. But I think bringing up FATF in a webinar, sometimes it's also helpful just to level set, because people say the FAT what? And the Financial Action Task Force, it's a global standards-making body made up entirely of financial regulators from across the globe who are all charged in their own countries with making sure that those countries' financial systems aren't used for things like money laundering or terrorist financing. So they basically are the group that puts out the guidance to all the regulators in different countries that says, look, if you want to be in the club of, you know, countries that are viewed as, say, not being a, you know, haven for money laundering, your regs have to say these types of things, and you need to enforce it this way. So it was a really powerful set of guidelines they put out, because it was the first time they really weighed in quite so specifically on digital identity. Not that they prescribed what to do, it was more of a cookbook of different, you know, types of tools countries could use, but, you know, really helpful. And I think what you're seeing now is countries across the globe are in some cases having to update their regs to comply with the FATF rules or guidance that came out about a year ago. Probably a little less so in the U.S. than other countries, in part because our own Treasury Department actually was pretty influential in driving that. But it's definitely something for, you know, I think people should pay attention to if they're trying to understand, you know, both in the U.S. and on a global basis, what does meaningful, robust digital identity actually look like? What are the regulators looking to see here? And, you know, there's some good examples that are in there from countries across the globe in terms of where there is good infrastructure in place already that might be a model to replicate.
Yeah, good. Yeah, really insightful, really good information. All right, how can organizations continue to innovate in the face of changing AML legislation? I guess, Jeff, you know, I'm going to ask you to lead us off on that one.
Yeah, so I think again, it goes back to being proactive, trying to see around corners, right? So what you see in the fintech space and in companies like DriveWealth is the explosion of growth, and in that, the explosion of innovation, right, in order to handle that growth. The big banks and others have to catch up in that space. I think partnering with companies like Onfido and others to bring best-in-class services inside those organizations in order to handle and outsource some of the additional needs and by using technology is crucial.
Yeah, thank you. Jeremy, you also have a similar background in terms of tracking this. What do you think about that? How can organizations innovate as this legislation continues to change?
I mean, the one thing I found, sitting in D.C. and working with a lot of the regulators, and talking to folks in the Hill, there was a big AML reform bill that passed last December, largely focused on, beneficial ownership and coming up with more, determinative answers in terms of, who owns what. I think the regulators in Congress want to see innovation. And in fact, the one thing I continue to hear from the regulators is don't be shy about innovating. And if you've got an idea, please come see us and talk to us about it. We'd love to hear it. To the point that, organizations like FinCEN now run innovation hours on a monthly basis where you can come in, now virtually, of course, but, present things to them, talk to them. And so, I think, where innovation is going to run into regulatory barriers if you're trying to do something that might be viewed as illegal or sort of on the border these days. But for the most part, I have found that the barriers to innovation and digital identity, when you look at regulatory issues, are actually less on the regulators and more on compliance people in some financial institutions that are very, I'll get in trouble for saying this a little bit, you get a lot of really risk-averse people sometimes in some of the banks that are just, because there's not a clear answer from a regulator, don't want to try something new. And the message I would, generally pass on to people is, if it seems like a reasonable thing to do, take advantage of the innovation hours that some of the regulators, like FinCEN and CFPB and others have put in place, and run the idea by them. You might find that they actually are going to ask how they can help to accelerate the innovation.
Yeah, really good point. Really good point. And, Kevin, I'm sure your customers are talking to you now about the fact that they're going to have to continue to innovate. I know part of that has to do with your products, but the fact is you're getting insights from the industry already. So what are you hearing?
Well, I think anytime whether you're a dedicated company that's sort of a challenger in the space, or you're a larger company trying to innovate in your business unit, you got to look at the technology. Obviously, you've got to spend a lot of effort on outreach and having relationships with the folks that were just discussed in terms of the regulators and some of the folks that are in charge of innovation, and get as many pieces of guidance you can. They're never going to say you're going to be fine, go ahead and do it, obviously, but you're going to be able to ask some questions and get some color, and that's just a whole management process. So you got to start that. You have to invest in it. You need to start it early, build that the relationship as much as you can, just to get as many signals as you can to realize what kind of risk decision you can take. But a lot of this, I agree with what I've heard, is that the industry needs innovation, and these laws are meant to protect citizens. So that in that sweet spot there's lots of opportunity to try some things, but in the right way. And I think a lot of it comes down to outreach and, being very transparent and taking calculated risks as a company. I think the opportunity is out there more than we allow it. Now, that being said, there needs to be these vehicles where you can safely go and vet some of these ideas. I think we'll cover this in a question or two. You still need those structures in place where people can ask more specific questions or get more direct feedback. Yeah,
good point. Really good point. All right. We have time for a couple more questions. I really want to give everybody a chance to respond to this one. Is there sufficient cooperation between enterprise banks and government when it comes to fighting fraud? If not, how do we fix this? All right, this is an opinion question, but there's no wrong opinions. So, Jeremy, I'm going to ask you to lead us off on this. Is there sufficient cooperation between banks and the government?
I think there is, but as I mentioned before, sometimes you get people who are afraid to ask a question of some of the folks in government when it actually might be welcome on the other side. And so, that's been my one observation is I think the regulators have changed their approach a little bit in the last few years, where they're encouraging more discussion and innovation relative to what you might have seen, say 10 years ago.
Okay. Yeah. Good point. Good point. What about you, Kevin? I don't know what your customers are telling you, but obviously, that there is communication issues between the government and your customers, right? I mean, so what do you think when it comes to fighting fraud? How do we fix that?
Well, I think the there's respect between the two groups, and there's pretty open dialogue you see at various public forums and working committees and great groups like the Better Identity Coalition that are working to sort of provide that interface in the middle. So I think there's a lot of good evidence out there. I think the fighting fraud part of it is just a big, complex problem that keeps evolving. And the speed at which we need to move, I would say, is not fast enough in that regard. And can I blame either side? No, I think it's just a big, huge problem, and we got to think about ways to innovate fighting fraud as much as we do on the core business model of what we're trying to obviously get people in using services. So I think in that regard, I can't ever say you'd say government is the fastest moving entity in these kind of things. But I think there's reasonable progress that they've made. We've got to find other ways to be faster, though. As a citizen that's like impacted by the lack of this speed, something needs to change in a different way. And again, these different mechanisms of allowing us to take more risks as a product technology function, as a large branded institution, those are the forces that kind of hold us back a little bit. And if government can help out on that, then I think that would even make this be more effective as a process going forward.
Yeah, good point. Jeff, you kind of live and breathe this in terms of fighting fraud in your background. What do you think? Do you think there's sufficient cooperation? And if not, how are we going to address that?
So to be blunt, there isn't. There's institutional bias and complacency, right? The big banks have fought to get things to the way they are now. And innovation is not at the forefront and doesn't actually, it's not a competitive advantage to them, right? It's good to have the systems in lockstep with what the government has currently because that's how they're built. I think there has been some shakeups of late in the last year and how those banks are starting to think about things. You saw Schwab buy E-Trade and, to me, even E-Trade is an, antiquated structure, right? And so I think what you'll see is the big banks now starting to look because finance services as a service, right? Brokerage as a service is going to be the path to the future, right? And integration of brokerage with crypto, with banking, they are going to have to start to evolve, and that's the only way to push it forward. In the meantime, companies like ours and others have to be vocal up to the regulators and to the industry groups to get our voice heard.
Right. Well, there certainly are a lot of industry groups, and there certainly are a lot of government entities that have tried to put their foot forward, right, to make sure this happens. But I don't know. It's almost like as soon as the discussion starts, we take a step backwards at times. That's just my own opinion. But anyway, so thanks for that, Jeff. All right. How do U.S. companies safely innovate in the face of regulatory and prohibitory laws without fear of repercussions? So, Kevin, I don't know. I think maybe you're the best to lead us off on this one. All three of you are dealing with innovation in one form or another right now in terms of bringing that forward. But why don't you tell us, how do U.S. companies, like your customers, safely innovate?
Yeah, this is sort of the thing I was mentioning earlier, where I think there need to be these innovation structures in place where companies can come in and try things out and not be afraid of something happening, especially at the early stage. And I think the one example that Onfido was lucky enough to participate in was in the UK, where we participated in the ICO sandbox effort. And that was a great example of being able to work with the government, try out some things that might have been a little more sensitive, and be able to push the envelope a little bit with industry on a couple different areas that looked at bias and looked at other aspects of liability around identity in a safe way. And I think that structure is a very useful one where you can bring these ideas forward, at least, and especially, again, if you're a large branded enterprise, you're having more fear of something going wrong. So it's an important aspect of the overall equation of bringing innovation through these types of markets.
Yeah, for sure. Jeremy, what do you think? As you move forward with your career too, now with the Better Identity Coalition, what are those coalition partners doing to safely innovate without fear of repercussion?
Well, I think part of it really depends on what are you trying to innovate around and what's your core business model. If it's, coming up with innovative ways to do digital identity proofing, I think there's a lot of appetite right now in and among the regulators right now to, see new ideas brought to the table and, recognize some of these approaches. if your idea of innovation is, creating a new cryptocurrency, and you want to argue that as part of innovation you don't have to comply with KYC or AML rules, you're probably going to have some repercussions. I don't think you can do that without fear of repercussion. And so I think it's a little bit of a broad question in terms of, I think there's areas where the government is actively encouraging people to push the boundaries and try new things, and then I think there's some things where in the name of innovation, you have people saying that certain rules that used to apply just shouldn't matter anymore, and that doesn't always go over so well as you might imagine in Washington. So, but I will, reiterate what I said before. You're seeing a number of the regulators set up innovation hours to at least come and talk through these types of things in a safe space, and I think that's been a constructive thing, for all sorts of different types of stakeholders, both legacy banks as well as some of the upstarts in the space right now to start to engage and at least talk about what the future might hold. Right.
Yeah, good point. Yeah, so Jeff, I wanted to also give you a chance to answer this question based on your background, and now, of course, working with client and regulatory inquiries together. You're in touch with both sides. So what is your feedback on this question?
So when I was at the regulator, we wanted to see firms come forward proactively and bring us in and talk to us about issues. You will never get a regulator to give you a verbal or written approval 100% of the time, right? But what you will get is you'll get somebody you can partner with, run the ideas by. They will tell you if it's a no-go, right? They're very happy to tell you when there is a problem or an issue, and they won't give you the 100% sign-off, but in those discussions, you can get comfort with you brought them across the line to be a partner with you on what you're trying to change, and get some comfort that you're moving in the right direction, what you plan to do.
Yeah, good point. I really appreciate all three of you. Your candor today it's refreshing to get this type of feedback and information. It's really so helpful for the industry at large. Okay, we have time for just a couple of questions. We have quite a few questions here to look at, and I'm going to grab a couple and we're going to get started here. The very first question, and let me read this. I have to lean in, excuse me. So with the potential for increased enforcements and penalties in the privacy and data security realm, what are some of the operational impacts of non-compliance to new data protection and privacy regulations? Okay, you want me to read it again? I can read it again. It's at the lower part of my screen here. With the potential for increased enforcement and penalties in the privacy and data security realm, what are some of the operational impacts of non-compliance to new data protection and privacy regulations? Who would like to, I'm just going to open this up now. Who would like to take a first shot at this?
I'd say big fines, having your name, reported in the press as, dealing with a enforcement action from somebody because you haven't been complying with data protection or privacy regulations. In fact, sometimes the reputational issues can be bigger than the financial hit, depending on, who's actually doing the fining. But companies certainly need to be paying, a lot of attention to these topics, not just, with financial services regulators, but I think, broadly across the board, given all the broader focus on data protection and privacy.
Right. Yeah, good point.
Yeah, I would just throw in, right, that reputational risk aspect is amplified in today's fast-moving technology, social media world, right? It doesn't take long for you to get put into a Reddit strip, and having people talking about you if there is one of these big fines. And then what it results in is, from an operational perspective, you're adding extra gates to make sure you're doing things right? Extra approvals, extra sign-offs, enhancing your policies and procedures.
Yeah. Kevin, did you want to offer any feedback to that question?
Yeah, just to build on that, I think the other aspect is even if you're in the right and something goes wrong, the distraction internally that you have to address with usually key people in your company to work on these types of points is sort of the softer side that or the hidden side of these things that has a huge cost. So it's the opportunity cost kind of consideration. So in addition to the other great points, just to prevent this from happening with inside a company keeps you focused on your core business as much as you can, and that's priceless for many companies.
Yeah. Good point. Okay, let me lean in here and see. There's another question. All right, this question says, civil rights groups are asking Biden to put the brakes on facial recognition technology. What are some of the ways we can prepare to respond to potential changes? Kevin, do you want to start us off on this one?
Well, I think, this is a pretty common question around the technology and biometrics in general, and I think you've got to build these with privacy really, really ingrained within them and getting consent and tools for users to opt out and withdraw their consent. So that's sort of one aspect of it. And then just being able to prove that these different technologies don't have bias in them is another important aspect. And I think those are some of the things you can do operationally around the use of these technologies to make sure that they're as, fair and equitable as possible. I think there's always going to be sort of extreme positions on these types of technologies, and the things that you can control are some of the things that I brought up.
Yeah, good point. Jeremy, what about you? If you think about it, it's just one more form of innovation, right? So what are some of the ways that we can prepare to respond to changes that might impact that one way or the other?
Well, I think one of the things that's been missing from the face recognition debate is that face recognition isn't one thing, it's several. There's a really big difference between opening up my iPhone with my face, which is a one-to-one match done in the device, and a surveillance application where there's, a camera on a pole outside as I'm walking by, getting part of my face and trying to decide, who I am. The latter, from my perspective, in most applications is kind of creepy, and the technology is not ready for prime time. And where a lot of the civil rights groups have been focused has really been on that type of application, where they're saying, look, we should not be, setting up a surveillance society. But I think what's getting lost in that is the fact that, beyond those two things, also I could be using Onfido's app to apply for a bank account, and I'm going to take a selfie and ask, them to compare that face against the driver's license. That's face verification. That's not a, big face recognition system. And so I think just trying to first differentiate between the different applications of facial biometrics technology is important. And then I think there's a broader issue when it comes to some of the controversial aspects around where surveillance can be used, where the country really does need to have a debate around how do we want to see this technology used, and do we need to put some limits in place in terms of, where it's going that we haven't quite had yet. So I'm hoping that the more we can focus on not conflating different applications of face technology will actually allow us to then start to focus on the real important questions.
Yeah, good point. Jeff, with your background too, looking at financial crimes, do you have anything else to offer in terms of the ways that we can prepare to respond to potential changes based on what they're saying, civil rights groups complaining?
Look, I think it's a real issue that garners a lot of attention, right, because of the different issues around race and how the functionality of these systems. I think obviously the advantage of the systems are our ability to ensure that the ID we're getting is for the person that we're getting the ID for, right? And so the more that we can build into the systems a way to ensure that capability works correctly, will lead to better results and take away a lot of the issues that we have in the space right now.
Yeah. Good point. Okay, I think we have time for just one more question here, and let me just scroll in here and make sure I read it. Excuse me with my dual focus lenses here. Okay, in the insurance sector, continued paper document delivery and regulations around distribution are among the most common barriers to KYC. How are banks leading the way here as models for improvements? Yeah, that's a loaded question. Banks are leading the way in the insurance industry in several areas, but in particular, this attendee is asking in terms of document delivery regulations around distribution. The know your customer thing, right? How are banks leading the way here as models using innovation? Kevin, I'm going to just tag you and call on you first.
Well, I think we covered a couple of these points earlier where the financial institutions really have thought about the digital experience in this process and really trying to leverage the best security but also the best user experience combination that usually is the next curve on those things. And I think both need to be considered. You don't want to just build a very highly secure solution that's really burdensome on users. And I think what they figured out, at least initially, is the basic identity document to binding to a legal identity to a biometric person step. Insurance industry has a few more things they need to look at generally, which are unstructured documents and a little bit heavier type of documentation to consider in the process. So I think that's the next step. And I think financial institutions do this also in mortgages and some of those types of processes where you have a little bit more that need to be notarized and what have you. So the insurance industry has a little bit of a different problem. They still need that core KYC, so I think they can leverage that and then build on top of it as a second step. And so there's lots of great off-the-shelf examples and all sorts of different areas of the financial ecosystem that they can look at and point to as great examples.
Yeah, thank you, Kevin. Jeremy, what about you? What do you think? What can the insurance industry learn from banks as far as this goes? I think you're muted.
You're right. How about that happen? I think one thing you're starting to see, or you'll start to see a little bit later this year, are some banks actually starting to jump into the market as identity providers. So banks, I think have argued for a long time, look, we put customers through the ringer when they open an account in terms of trying to figure out who they are. Is there some sort of a model where, we could essentially, as a service to our customers, vouch for who they are to other parties? And so without sharing too much in this forum, I expect that, starting, probably, late Q2, early Q3, you're going to start to see at least a couple of very large banks come out with an offering here that would, allow them, among other things, to, be used as a way that they could vouch for your identity to an insurer or a lot of other parties in the space. And I think that's going to be a really interesting market development in the space in the second half of 2021.
Yeah, good point. Jeff, do you have anything to add to this, talking about the insurance industry?
Well, I would just say in general, in general, right, insurance, annuities, and alternative assets have traditionally been highly paper-based constructs. There are a bunch of vendors now in the alternative asset space that are finding ways to standardize those documents, to ingest those for data purposes as well as for AML KYC purposes. The annuities and insurance space have to catch up, right? It's still largely paper-based. And that is a hole in the system right now.
Right. Oh, I think the insurance industry is working on it, but they definitely could use a lot of advice from the banking industry, no doubt about it. Well, I am afraid it's time to wrap things up. I wish we could keep talking. To those of you who didn't have your question addressed during this live event, please note that a member of the team is going to be getting back to you. We don't want any of your questions to go unanswered. What a great discussion today on a topic that, in my opinion, is more than just top of mind for the industry. This is all really happening in very substantial ways. I want to thank our expert panelists, Kevin Trilley, Jeremy Grant, and Jeff Pasquarella, for sharing both their candid comments and very, very helpful information. And on behalf of American Banker and our sponsor, Onfido, I want to thank all of you for joining us as well. Have a great rest of your day.